Audio Jungle. Audio Jungle.
What is up guys, it's Dino here and today I'm back with another video, and today I'm going to be talking about how to get a mortgage. So let's get straight into the video. So the first thing that you need is you need to approach a lender, whether it's a bank, a building society or a mortgage broker who has access to multiple banks and multiple building societies and lenders, and approach them and say that you want to get a mortgage, and you have to provide them with details about how much you earn, how much you spend, you know, how old you are, all that sort of stuff. And they'll ask you for a few documents as well. So they'll ask you for proof of ID. So that could be a passport or a driving license, a proof of address. So that could be a bill or a bank statement. They'll also ask you for 3 months worth of bank statements, 3 months worth of pay slips if you have a job, if you're employed, and they'll also ask you for your work contract. If you're self-employed, it's slightly differently, but they'll ask you for similar things, but they'll also ask you for 2 years worth of tax returns, and also they'll want to know your incomes and expenses, so they'll ask you for your bank statements and all that sort of stuff, but they'll want to know how much you spend on your business as well, to actually know how much you take profit each month, and they'll calculate it from there. Second thing, which technically should probably be the first thing, is you need to have a deposit ready. So before you even think about buying a house, before you even think about approaching lenders and trying to get a mortgage on a house, you need to have a deposit. So please make sure that that's the first thing that you have, but if you haven't, this is the step. You have to have it or be in the process of almost having one ready. Okay, so know what the budget is going to be, what you're looking to buy. You'll know that based on the mortgage amount that you can get, so that will be your gross income times 4.5. Some lenders do times 5, and that's how much you can borrow, and then obviously how much you have as a deposit as well, and that will let you know more or less what is your budget for the property that you want to buy. But first things first is have a deposit, and then also when you approach the lenders, you'll have to give them all the documents that I just mentioned. Third is find out how much you can borrow. So again, this is in the process when you're approaching the lenders and you give them your documents. They'll run calculations based on what your earnings are and what your expenses are, and you know what rent you're paying at the moment, and if you have a car, food. They'll also chuck in a buffer per se for extra additional costs that you might not think of, or that you might not come across very often, but that might happen. So they'll calculate all that, and they'll let you know how much you are allowed to borrow from them. But also you'll have an idea, like I said, it's more or less going to be your income times about 4.5. So once you found out how much you can borrow, you want to try to get a mortgage in principle. Mortgage in principle is basically the lender, either in writing or an email or whatever, saying this is how much you're allowed to borrow if you're approved, if you know all the credit checks go through okay and all that sort of stuff. You want to get a mortgage in principle. That allows you to then go looking for houses. If you do put in offers, you can say to the estate agents, look, I've already got a mortgage in principle. So it should be a fairly easy process from then on. So once you do get the house, you know, offer accepted on a house that you want to buy, the next step and the final step is just filling out all the application forms, all the paperwork that the lenders want and need, and going through the process. And then again, once the offer is accepted, it will go through all the conveyancing process. So it's going to be a lot of paperwork coming from searchers, your solicitor, the mortgage company is going to send out a surveyor. They're going to give you paperwork, a report on what the house situation is, you know, the condition of the house, if they think there's any issues. If there are any issues with the house that either the mortgage provider or you are not happy, then you might want to get a contractor, a builder, or whoever it may be to take a look and see how much it will cost, so you can then budget into the future. Or if it's an urgent thing that needs to be fixed now, you can see if you can afford it or if you need to back out of the deal. And that's really important because if the deal falls through, it's money spent and time wasted. And also, if the deal does go through, so you do buy the house, then in that case, you could be stuck with a problem that if you hadn't had a surveyor, which in this case the mortgage company provided, if you didn't have a survey on the house, then you might be stuck with a problem that you're not happy with, and it's going to cost you a lot more money in the future. But in order to get the mortgage, it's just filling out paperwork, speaking to lenders, and just following their questions and just answering all their questions, what they have on your earnings and on your expenses, provide them with all the paperwork that they need. I hope that video was helpful. It was a short one, but I hope you took some valuable information from there. I hope to see you in the next video. If you did enjoy it, press the like and subscribe button, and I'll see you in the next one.